It's a rainy Wednesday here in Seoul. Hello and welcome to Business Daily. I'm Lee Ji-yoon. We have a lot of stories lined up for you today, so let's get started with a glimpse of the day's highlights. The U.S. Trump administration says it will go over all of its trade deals to make sure that they meet their needs. With the Bank of Korea expected to keep the key interest rate on hold tomorrow, how are Korean households dealing with their growing debt piles? We have these stories and more coming right up. While President Trump is considering actions to address U.S. trade deficits, recent analysis shows that Korea's surplus from trading with the United States only comes to about 1/5 of the total in value added. According to a report by Korea International Trade Association, Korea posted a trade surplus of $34.5 billion in the United States in 2014. But the trade surplus in value added amount to only $7.2 billion, which is 20.8% of the initial amount, a figure far lower than those of other key trading nations, including China and Japan. Now, the report said this is because Korea's exports are mainly of low value-added goods, such as machinery, as well as electric and electronic goods. It also added that in potential trade negotiations with Washington, Korea could emphasize this, as well as the fact that its deficit in services is on the rise. And the White House has revealed its plans to review and update many of its trade deals with other countries to make sure that they benefit the United States and its workers. The announcement could set off alarm bells in Seoul as President Trump has heaped criticism on Washington's FTA with Korea. Our Oh Jung-hee has more.
In a briefing Tuesday, White House Press Secretary Sean Spicer said the Trump administration will look through the nation's trade agreements to make sure they're the most up-to-date and address the technological advances that have occurred.
I think the idea is to make sure that we are looking at all of the trade deals we have throughout the globe to make sure that they continue to benefit American workers. And in many cases, we can update these deals.
He stressed, however, that such a review isn't targeted at any specific country. Spicer reaffirmed the president's pledge to review all trade pacts and agreements, as Trump has previously said free trade deals have contributed to America's economic difficulties over the years. Since his inauguration, President Trump has been focusing on the protection of American workers and companies as his top priority. Last month, Trump withdrew the U.S. from the 12-nation Trans-Pacific Partnership and also pledged to renegotiate the North American Free Trade Agreement. The Chinese government has expressed concern over the administration's trade policies, as Trump has vowed to raise import duties on Chinese goods to 40%. China's Commerce Minister Gao Hu-chang said Tuesday that a trade war between the two countries should not be an option and stressed that cooperation will benefit both sides. South Korea will be monitoring how the White House addresses the free trade agreement between Seoul and Washington that came into effect in early 2012. On the campaign trail, Trump has slammed the deal, saying it was killing jobs in the United States. Oh Jung-hee, Business Daily.
U.S. chipmaker Qualcomm has filed an injunction against Korea's Fair Trade Commission, saying a fine and corrective measure imposed last year are unfair. Qualcomm says the FTC was influenced by commercial interests, citing the credibility of the commission's former vice chairman, who oversaw the case and is currently being questioned about his ties to Samsung, a major Qualcomm customer. The Korean Antitrust Agency is currently under investigation by the Independent Counsel as part of the ongoing corruption scandal involving President Park Geun-hye and Samsung Electronics. The FTC fined Qualcomm more than $850 million in December for monopolistic practices and ordered it to revise its business model. Exports of Korean cosmetics surpassed $4 billion in 2016 amid a surge in outbound shipments in recent years. According to data by the Ministry of Health and Welfare, Korea's cosmetics exports rose 44% in 2016 to $4.18 billion. Now, that's more than a tenfold increase over the $450 million tallied in 2009. China was the biggest buyer, importing $1.57 billion worth of Korean beauty products, or 37.5% of Korea's cosmetics exports. Hong Kong came in second with a 30% chunk, followed by the U.S. and Japan. Korea's health ministry says it will continue its efforts to help local cosmetics firms enter China. However, there are rising concerns for the industry as Beijing could impose economic sanctions in response to Korea's decision to install the U.S. missile defense system, THAAD. The Bank of Korea's second monetary policy meeting of the year is set for Thursday, and it's widely expected that the central bank will keep its key rates steady, considering a number of uncertainties looming at home and abroad. Now, one of them is the household debt burden, which has been fast growing in an era of low rates. For more on this, we have our Shin Se-min joining us in the studio and what we can expect from the central bank. Hi, Se-min.
Hi, Jian.
All right, so most people don't really think about central bank decisions in their daily lives, but for a lot of households now, it looks like this will be an issue of concern.
You're right. Undoubtedly, numerous households now carry the burden of debt payment now. But before we get to the details, here's a look at why this matters for many Koreans. This man has worked in the financial sector throughout his entire career. As a father of two, he has a personal loan that he took out a couple of years ago. He wanted to remain anonymous for the interview, but says the potential of rising rates in a volatile market is alarming.
It certainly is worrisome, especially for single-income families like mine. It would be difficult to make a lump sum payment for my loans before getting hit with higher interest rates. So I think the burden of higher rates is something that's inevitable.
Korea's central bank has kept its benchmark policy rate at a record low of 1.25% since June last year, keeping rates for other loans, including mortgages and personal loans, low as well. This trend has spurred massive borrowing over the years. The interest burden from this debt differs for each individual. A person with a high credit rating may be offered a relatively cheap lending rate, with the lowest starting at an average 4 to 5% as of early this year. But for people with bad credit, it could climb to as high as 30%. Mortgage rates have already been fluctuating on the back of a rise in U.S. interest rates and expectations for more hikes down the line. Korea's benchmark mortgage rate, also known as KOFIX, has been on a steady upward trend for the past few months. Korea Federation of Banks says the KOFIX rose 0.05 percentage point in January, reaching 1.56%, having been on a continual climb since August last year. Especially worried about this upswing are borrowers who have floating rates instead of fixed rates on their debt, as a potential move by the central bank could quickly increase their payment burden. This is expected to weigh heavily on those who have contributed to the rapid rise in the country's household debt pile, which reached $1.17 trillion as of the end of last year.
So, Se-min, efforts to contain this ever-rising household debt has been continued for a while, and the government also took part in stepping up the screening process for borrowers last year. But looking at these household debt numbers, it looks like that the rise in debt pile has persisted.
You're right. As the BOK announced just yesterday that the household debt level hit another record high as of last year, which was $1.17 trillion. Now, according to the central bank, it was the biggest quarterly gain since the bank started keeping data back in 2002. The problem is a lot of these recent gains are being fueled by loans taken out from the second-tier lenders like insurance companies, credit cooperatives, and savings banks, which have higher interest rates.
There's more of a fear factor now that the volume of loans from second-tier lenders have expanded. It's as if the government's plan to curb the growing household debt took a wrong turn, but it's difficult to say that that alone will put a severe dent in the country's ability to manage the growing household debt level.
All right, so there's still some confidence that levels are manageable then?
Right, and that sentiment is also being shared by Moody's, which said earlier this month that Korea's rising household debt levels do not pose immediate financial stability concerns for the sovereign or the country's banks. So in that sense, things do not seem to be at the worst, but the ratings agency also expressed its share of concerns, saying that the structure of mortgages in Korea poses unique risks for households, which with the majority of mortgages being of floating rates or having non-amortizing structures. Now, this is, of course, referring to households that are burdened with changing rates or those that are not paying their principal along with the interest each month.
And a lot of this is why analysts are saying that there isn't much room for the central bank to change rates.
Right, that seems to be the case for the time being. The consensus seems to be that the central bank will stand pat this month because although the pace of economic growth is not sufficient enough, the BOK would not want to risk the possibility of triggering more debt growth. And for now, there is no imminent need for the bank to push up rates just because of Fed's rate hike scenario. Now, that also comes from strong belief that Korean markets are stable enough to fend off an outflow of funds, even if the U.S. boosts its rate further. So for the time being, we'll be seeing some of the rate freezes in the coming months.
And we'll keep a close eye on those debt levels.
Sure.
All right. Thank you so much for coming in today.
My pleasure.
After months of speculation, the California-made Tesla EV will hit the Korean market in a few months, and many in the industry are expecting the arrival of the luxury electric sedan to push the country's EV market to new heights. Our Eunice Kim has more.
Online orders are open and a showroom under construction at Shinsegae's vast Starfield Hanam shopping mall in Gyeonggi-do province. Tesla cleared a big hurdle last week, receiving its manufacturer's license from the Transport Ministry, putting it on track to officially roar into the Korean market in May. Tesla's premium Model S boasts a travel distance of 512 kilometers on a single charge at a maximum speed of 250 kilometers per hour. The EV revs up from 0 to 100 kilometers in under 5 seconds, the fastest street-legal acceleration that's to shatter the thought that EVs are slow and can't travel far. With the arrival of the electric luxury sedan built in Palo Alto, California, many in the industry are watching for a boost up in Korea's EV market this year. GM Korea is set to release its fully electric Bolt EV sometime in the first half of the year. The affordably priced vehicle has received acclaim in the U.S., where Motor Trend magazine has already named it its 2017 Car of the Year. Renault's Samsung's extra small two-seater Twizy looks to be unveiled also in the year's first half, while Kia Motors is working to extend the driving distance of its Soul EV to match that of Hyundai's Ioniq, while keeping its price low. As more Koreans opted for so-called green cars last year, the number of people applying for subsidies this year is jumping as well, even pushing some local governments to close registrations early. This as EV incentives have risen. Combining state and regional subsidies could push the sum to a high of 26 million won, or about $22,800. But the fact remains, infrastructure has a ways to keep up. The government stands by its commitment to build 10,000 more charging stations at large supermarkets and major stations before the year is up. Eunice Kim, Business Daily.
Due to the sweltering summer heat last year, air conditioner sales reached a record 2.2 million units. And the sales outlook for this year doesn't look that much different, which is why electronics firms are rushing to unveil new models to get ahead of the game. Our Lee Ju-young has more.
The goal is for year-round use. These multifunctional air conditioners are breaking with conventions and offering heating, air purifying functions, and dehumidifying capabilities as well. LG Electronics became the first Korean firm to launch such an all-purpose appliance this year, the Huisen Dual Air Conditioner, which can also adapt to the user's lifestyle patterns and surroundings through its AI deep learning capabilities. After the device finishes collecting necessary data, it uses its body sensor camera to distribute cool air to the space where people are typically at in the house, while also self-adjusting the strength of air. LG says it aims to increase air conditioner sales by 10% this year with this smart device that allows users to reduce energy by up to 20%.
By cooling or purifying air in the main living spaces, they are able to operate more efficiently.
Following LG, Samsung Electronics has also unveiled a new air conditioner of its own, its first ever wind-free wall-mounted gadget. The award-winning device is set to maintain a comfortable room temperature and create still air once the desired temperature is reached, allowing users to cut power usage by up to 72%. Other firms like Carrier and Daewoo Winia have also released new models in January much earlier than usual and are taking pre-orders until the end of March. Industry watchers say this is to disperse demand and prevent backlog in sales come summertime when seasonal demand is high.
After launching the new models in January, aircon pre-orders have jumped more than 40%.
With these changes, companies are expected to be able to manage a more stable supply in products in the year ahead and provide better customer service for clients compared to previous summers. Lee Ju-young, Business Daily.
And that brings us to the end, but we'll be back tomorrow with more business news that matters to you. So don't forget to check back with us then. Thanks for watching and goodbye.